All right, folks, buckle up because we're diving headfirst into some serious financial reports today from Jio Financial Services. You guys sent us quite the head-scratcher this time.
It's always a thrill, to peel back the layers and uncover the stories hidden within the balance sheets, especially with a company as dynamic and, frankly, as fascinating as Jio Financial Services. They've been making quite the splash in the Indian market, and this latest quarterly report, well, it gives us a sneak peek into their recipe for success.
And since we know you're already familiar with the basics, we're going to skip the jargon and zero in on what really matters for seasoned investors like yourselves. So let's cut to the chase, shall we? How much money is Jio Financial Services actually bringing in? What's their top line looking like?
Well, their total income for the second quarter of fiscal year 2025 has hit a pretty substantial Rs 693.85 crore.
Okay, hold on a second. Did you say fiscal year 2025? It's only 2024.
Ah, yes. Good catch. You see, many companies, especially in India, they don't actually follow the calendar year. Their fiscal year kicks off in April, so this report, it's actually for July to September 2024.
Gotcha. So back to that RS 693.85 crore. That's a significant jump from the previous quarter, wouldn't you say?
Absolutely. This signifies some serious growth, even with all the regulatory changes happening in the Indian fintech landscape.
It's interesting you mentioned the regulatory environment because that's something a lot of companies are grappling with right now. But this growth, this suggests that Geo's strategy is proving to be quite resilient, don't you think?
I'd say so, definitely. That kind of growth, especially considering the current market conditions, it really speaks volumes about their ability to adapt, to navigate those choppy waters and come out on top.
Okay, so RS 693.85 crore, that's a healthy chunk of change, no doubt. But where's it all coming from? Break it down for us. What's generating that revenue?
Well, they've got a pretty diverse portfolio, which seems to be working in their favor. Their revenue streams, they include interest income, dividends, fees, and then there's this interesting item called net gain on fair value changes.
Wait a minute. Net gain on fair value changes. Now, that's a mouthful. What exactly does that mean in plain English?
In essence, it means their investments are performing exceptionally well. Think of it like this net gain. It suggests that Geo is actively managing their investments, perhaps capitalizing on market movements to really maximize their returns. For example, their recent investment in company X yielded an impressive Y% return.
So they're not just a lender, they're acting as strategic investors as well.
Precisely.
That adds a whole new dimension to their financial picture.
Exactly. They're not putting all their eggs in one basket, are they? They're diversifying those income streams, building a more robust and more resilient business model, and it's clearly paying off.
This is what makes Geo Financial Services such a compelling case study. They're clearly thinking long-term, strategically positioning themselves for sustainable growth. But, and this is a big but as with any company, especially one experiencing rapid growth, there are always expenses to consider. Let's flip the coin for a moment and see what's happening on the expense side of things. What kind of costs are they incurring as they expand?
Well, as you might expect, their expenses are also increasing. It reflects their ambitious growth strategy. We see it primarily in their staff and operating costs. For instance, their investment in digital initiatives is really apparent.
Yeah, those ads they've been running are hard to miss.
Exactly. And that's a clear sign of their commitment to connecting with a digitally savvy audience.
Which makes perfect sense, consider their target demographic. They're going after a younger generation that practically lives on their smartphones. But, and I think this is important to highlight, increased spending, even on strategic initiatives, isn't always a positive sign, right? At the end of the day, what matters is profitability. So let's get down to brass tacks. Are they making money? What's their gross profit looking like?
Now, this is where things get really interesting. Their gross profit for the quarter came in at a pretty impressive Rs 689.85 crore, and when you look at their gross margin, it sits at a healthy 99.43%. That's really something for a company in their space.
Okay, so a 99.43% gross margin. That tells us they're managing those costs effectively, wouldn't you say, at least when it comes to their core offerings. But let's not forget about all those other operating expenses we talked about earlier. How do those factor into the bigger picture? What's their operating income looking like after we factor those in?
You're spot on. Gross profit alone doesn't give us the whole picture, does it? We need to take those operating expenses into account to get a real sense of their profitability. And this, my friend, is where things get even more fascinating. Because despite that increase in operating expenses, their operating income remains remarkably strong at Rs 685.85 crore for Q2.
Okay, so they're managing to keep those operating costs in check, even while they're investing heavily in growth. Talk about walking a tightrope. But for our listeners who might not be financial experts, break it down for us. What does that operating income figure actually tell us about Jio's financial health?
In a nutshell, it tells us they're running a tight ship. Their core business operations are lean, mean, and they're generating profits from their everyday activities. And if we calculate their operating margins, it clocks in at an impressive 98.85%, significantly higher than the industry average, I might add.
So not only are they profitable, they're outperforming their peers in terms of operational efficiency. That's a pretty enviable position to be in. But let's cut to the heart of the matter, shall we? The bottom line. What's their net income after all those expenses, after all the number crunching?
Ah, yes. The net income, the ultimate measure of a company's financial success. And I'm happy to report that Jio Financial Services delivered a net income of Rs 684.58 crore for Q2. That's not just a little blip on the radar either. It represents a significant leap from both the previous quarter and the same period last year. They're on a serious growth trajectory.
Okay, so they're profitable, their margins are healthy, they're growing at a rate that most companies would envy. It sounds like they've got the Midas touch. But even with a stellar income statement, we can't overlook the importance of cash flow. Can you shed some light on that for us? How much cash are they actually generating from their core operations?
You're right, a company can look fantastic on paper but still struggle if the cash flow isn't there. Fortunately, Jio Financial Services seems to be doing just fine in that department as well. Their cash flow statement, it paints a picture of strong cash generation from those operating activities. A healthy Rs 1,017.71 crore for the quarter. That positive cash flow. It gives them the flexibility to invest in future growth, maybe pay down some debt, or even return some value to shareholders through dividends.
Now, that's what I call financial freedom.
Speaking of debt, what's their current debt level? Are they borrowing heavily to fuel this growth, or are they managing things responsibly?
That's the million-dollar question, isn't it? A healthy balance sheet is crucial. While some debt is pretty normal, expected even, for a company looking to expand, we always want to keep an eye on those levels. Now, Jio Financial Services has a debt-to-equity ratio of 0.00, which is incredibly low for their sector.
Okay, so they're not drowning in debt.
Yeah.
That's good to hear. What about the future, though? Any hints about what investors should expect in the coming quarters? Have they issued any guidance? They have. In their recent earnings call, management sounded pretty optimistic about what lies ahead. They're projecting continued growth in both revenue and profitability as they expand their product line and reach a wider customer base.
Sounds like they're showing no signs of slowing down. Ambitious, to say the least. But before we get too far ahead of ourselves, let's take a look at some key ratios, shall we? You know, those financial indicators that give us a more nuanced understanding of how they're really performing.
Absolutely. Ratios are like financial x-rays. They help us see beneath the surface and compare a company's performance with its competitors. So when we look at Jio Financial Services, one ratio that immediately jumps out is their return on equity, or ROE. It's sitting pretty at a remarkable 19.50%, which is significantly higher than the industry average. This tells us that they're using their shareholders' investments very effectively to generate profits.
So they're not just growing, they're growing profitably. Music to any investor's ears. But this is a competitive landscape, no doubt about it. How are they stacking up against the other players in the market? What's their market share looking like, and how would you describe their competitive position right now?
Well, in a surprisingly short amount of time, Jio Financial Services has managed to snag a significant chunk of the market, a cool 19.01% to be exact, that meteoric rise. It's largely thanks to their innovative product offerings, their digital-first approach, and let's not forget the powerhouse backing of Reliance Industries.
Yeah, that Reliance connection definitely doesn't hurt. But what about the competition? Are they feeling the heat from Jio's rapid rise?
Oh, you bet they are. The traditional banking sector is definitely feeling the pressure. Jio's, shall we say, unconventional approach, their focus on digital, that resonates with a younger, more tech-savvy customer base. You know, the kind of people who want their banking to be as easy and personalized as ordering takeout from their phones.
It's like they're rewriting the rules of the game right in front of our eyes. They've got the growth, the margins, the cash flow, and they're even giving those traditional players a run for their money. It's a classic disruption story, wouldn't you say? But let's bring it back to our listeners for a moment. For someone who's following the financial markets, why should they care about all of this? What's the big takeaway here?
That's the million-dollar question, isn't it? And I think the answer has two parts. First, Jio Financial Services, they're a textbook example of how to not just survive, but to thrive in a rapidly changing market. They're not afraid to challenge the status quo, to fully embrace technology, and most importantly, to really cater to the needs of a constantly evolving customer base. And second, their success story, it has major implications for the future of finance, not just in India, but potentially globally.
It's like they're writing the playbook for a new era of financial services, one that's digital first, laser focused on the customer, and completely obsessed with innovation.
Exactly. And the most exciting part, their journey is far from over. They're constantly adapting, expanding into new territories, and really pushing the boundaries of what's possible in the financial services world.
So as we wrap up this deep dive into the world of geofinancial services, what's the one thing you want our listeners to remember? What's the key insight they should hold on to as they watch this company's journey unfold?
Keep a close eye on their strategic moves, particularly their investments and partnerships. Those are the breadcrumbs that will tell you where they're headed next, how they plan to stay ahead of the curve in this incredibly dynamic and fast-paced market. Their ability to leverage technology, adapt to the ever-changing whims of the consumer, and forge those strategic alliances, that's going to be crucial to their continued success.
Wise words. This has been an incredible journey exploring the financial landscape of Geo Financial Services. We've marveled at their extraordinary growth, dissected their winning strategies, and peeked behind the curtain to understand the driving forces behind their remarkable performance.
It's been a pleasure joining you on this deep dive. Their story is far from over, and I, for one, can't wait to see what the future holds for this innovative powerhouse.
And there you have it, folks, your personalized deep dive into the fascinating world of Geo Financial Services. We've armed you with the insights and knowledge to impress even the most seasoned investors. Until next time, keep exploring, keep those questions coming, and remember, the world of finance, it's always full of surprises.